All right, Kevin Lehtiniitty, how are we doing, sir?
Hey, Drew, good to see you. How are you?
I'm doing great. I am really grateful, first off, that you decided to work with the dynamic team to put this report together, and just it's always a gift to be in discussion with you. Um, so, thank you. First off, how are you guys doing generally? How's the business? How are vibes right now? I just got done this morning recording our daily news show, and I'm just like slightly overwhelmed with everything that's going on. How are you? How are you guys feeling over there?
It's a good time to be in stablecoins. I think that's for sure. If you're not growing in this market, then there's probably something seriously wrong with the value proposition or the business model. I think for us, we've always believed in the layer that does the payments network, orchestration, etc., needing to be incredibly neutral. And for us, Genius has been a phenomenal spur where all of a sudden we're thinking about things and kind of from a product standpoint, CPN is probably the closest thing that exists to Borderless. When saying, geez, if the entire market collapses to just using USDC, then what's the point of Borderless versus CPN? But now with Genius and everything that's coming out on the issuance side, whether it's new chains that are being created from like the Stripes and others of the world, whether it's new stablecoin projects that are being announced, or at least rumors from like the Amazons, Walmarts, or the banks like Bova's, or the fintechs that are getting into things, USDG's growing, etc. The more that reinforces our belief that you need to have a credibly neutral layer that isn't owned by Circle or owned by Tether or owned by someone else that's able to kind of bring all these things together. And I think Visa articulates this well in their value proposition of a network of networks. And that's certainly where we think we play in. And the more growth there is and the more diversity there is, the more value there is in a network of networks. So it's been good vibes is probably the
Yeah,
shorter answer to your question.
yeah. It's a really interesting. I've heard you say this in person with people, and I just think it's a really helpful place to start this conversation. Is this network of networks, this kind of
Yep.
CPN framework that I think you guys have, in some ways, really you think about yourselves in a similar way, but obviously different. Help people understand um, that framework, this network of networks framework, and how CPN is similar to what the borderless network is doing, but obviously very different. Like, help us understand the difference there.
I think it comes back to some of the stablecoin roots that we have as a company and that I have. So I've been full time on stablecoins since 2016, which is a little wild that it's been 9 years,
What
and
was the
have
name of the
suffered.
stablecoin project? The first one that you
Uh,
said it was like the
I
first
I helped
essentially.
launch TrueUSD, which was the first US based fully reserved stablecoin that kind of pioneered the model of using a qualified custodian to hold all the assets versus an offshore corporate bank account and all those things. And I think have long suffered the traditional entrepreneur's curse of being too early to markets. And 9 years in stablecoins, I think definitely counts as too early to markets. But have kind of been on the issuance side with helping True USD. Then there was a whole basket like True GBP, True CAD, True AUD, True Euro, which is the first basket of tokenized currencies in the world on chain. I helped write ERC 1400, which was the Ethereum token standard for tokenizing RWAs, with kind of an aim at T-bills, money market funds, right? If stable coins are going to be kind of currency on chain, the next obvious thing is then the yield-bearing assets that back them coming on chain. Done a lot of liquidity stuff, building infra for on and off ramps that were in, powering MetaMasks and other kind of large retail adoption, moving, tens of billions and hundreds of billions of dollars a month, respectively. And when I looked at Borderless, what I really saw was this growth of locally licensed providers. And this touches on a little bit of the dynamic playbook, where yes, stablecoins and blockchains are inherently global, but fiat currencies and regulation are inherently local and will remain local. And you're going to have this juxtaposition between these global settlement layers, Solana, Base, some of the stuff that's coming with ARC and Stable and all these other things, and USDC, USDG, all the other currencies that are being tokenized. But that's going to be juxtaposed with there will never be a universal banking license. 2 years from now, there will not magically be some I am a stablecoin bank. I am licensed in every single country in the world through this one license, right? Central banks aren't going to completely abandon their fiat currencies. We're not going to wake up one day where the Indian government says, you know what, screw rupees. We're just going to make USDC the currency of India. So there's always going to be this juxtaposition between this kind of global technology, but then these local regulatory frameworks and kind of fiat currencies. And what we saw was basically this growth of locally licensed providers in certain geographies, like Bridge in the US, BVNK that kind of started in the EU, Bitso in LATAM, Yellow Card in Africa, Reap in Asia, etc. And we started to say, okay, imagine if something like Swift didn't exist and every bank had to connect to every single other bank that it wants to transact with around the world. That's insanity. And that was the current state of stablecoins. If you were a licensed orchestrator in the US and you wanted to do a transaction to Africa, you had to go integrate and work with a licensed provider in Africa. And you have to do this one by one in every corridor. So this is fixed with payments networks. We don't need to create another blockchain. We don't need to create another stablecoin. We don't need to create another licensed liquidity provider in a region. What we need to do is create this network of networks where people can connect to Borderless, and Borderless is already connected to dozens of regulated counterparties in different parts of the world. And they're then able to transact with all of these different counterparties for the other leg of the transaction, kind of through a Swift. As a bank, I connect to Swift. Swift is connected to all the other banks. Now I can transact with all the other banks through Swift. The exact same concept. As a regulated stablecoin orchestrator, I can now transact with all these other orchestrators that are regulated in different regions by connecting to Borderless. And this sounds a lot like CPN. There's actually a lot of similarities in the CPN white paper and our original website that we launched like a year ago with beneficiaries, originators, kind of this concept of PFIs or participating financial institutions. And it's a very, very similar framework. Our difference is we believe that this needs to be credibly neutral. We believe it needs to be multi-chain. We believe it needs to be multi-stablecoin, not just support USDC, but support USDC, USDT, USDG, PYUSD, et cetera, in addition to the non-US stablecoins that are going to come as well, right? We think that if VisaNet were called Bank of America settlement system, it never would have gotten the global proliferation because there would have been no way that they would have convinced all of these competitive entities to come in on it, right? I think the consortium model was the only way VisaNet could be born. And we think in this world, a credibly neutral layer that isn't owned by a particular stablecoin or a particular blockchain or a particular piece of infrastructure, but is its own standalone neutral layer, that's the only party or type of party that's going to be able to bring all these competitive forces together. And so far we've got dozens of fierce competitors that have all come together onto the Borderless network. So it seems to be working.
Yeah. You in the dynamic report itself, you described this dynamic, for lack of a better term,
Good
you
pun.
described this as a liquidity maze. You said
Yep.
stable coins are flowing globally, but banking license, compliance regulation, and FX liquidity are stubbornly local.
Yep.
Give us a sense of this dynamic around, I'm gonna stop saying that word after that, this reality around the licenses and the regulation that we're starting to see in developed markets that are starting to become way more clear, things like the Genius Act versus what you've mentioned in this report with where the corridors where stablecoins are growing fastest actually are with these emerging economies. Um, what's that like right now from your perspective in terms of the local regions where the stablecoin use cases are actually popping up and something like Borderless becomes really, really needed, and speak a little bit to that reality and what you're seeing.
The more fragmentation exists and the less clarity there is, I think those two things go hand in hand. I think the less clarity there is, the more it leads to fragmentation. Then the more useful it is to have something that brings all that fragmentation together. And I'll give you a great, maybe more concrete example. As we look at US and EU, those now have some pretty clear frameworks. Genius is in place. There's more coming from this administration. EU kind of led the way with the MiCA regulations and all of those things. But if we look at where stablecoin flows are not necessarily originating, but heading to, it's mostly Latin America, Africa, Southeast Asia, these typical kind of emerging markets. And it's those markets for a few reasons, among which the banking systems are less developed. The currencies are less stable, so there's a stronger desire to dollarize your savings versus holding in the local currencies. Um, and in those markets, the regulations around stablecoins are much less evolved, but are also quickly moving. So if you look at things like Brazil, there was kind of this recent change among IOF tax where it was 38 basis points, then it was hundreds of basis points. Now maybe it's 38 basis points again. It's like the US and EU governments typically, maybe some caveats, don't like randomly change by 10x various tax codes and other things like that on the drop of a hat, right? That happens a lot more in emerging markets. And if we look at something like Brazil and we look at the stablecoin liquidity that exists there, you have a lot of stablecoin companies that are building liquidity in Brazil, right? So you have like the Trace Finances, the Bitsos, the Noncos, the Avenias, the Blind Pays. I can go on and on and on. There's kind of all these people that are becoming liquidity providers between BRL and stablecoins, which is great. That's a very needed piece of the infrastructure. But if you pull the FX rates between all these different providers, and Borderless is tapped into all these different FX price streams across everybody on the network that we see in real time, there are massive differences
Yep.
between kind of one provider's pricing and another provider's pricing. And it's not necessarily consistent who is the best provider all the time. That's not actually a thing. It depends on kind of the current liquidity state in the markets. It depends on the type of a transaction. A consumer transaction, a B2B transaction are massively different. So then you start to get into the question of like, what does best execution look like? And how can I say, okay, great. Now, instead of being beholden to a provider, which has a couple issues. One, it means I have no redundancy if there's any sort of downtime, right? So my reliability takes a hit. The other is the switching cost becomes super high because I now need to rip all these APIs out and integrate new APIs if I want to switch to a different provider. And then three, I'm beholden to that provider and their rates. And they know how high the switching cost is, which means they can extract much higher rents from using their liquidity and their service versus connecting through something like we've built, where it says, great, there's 4 providers that you're able to access and dynamically route to. Now we can do best execution. We can look in this second and we can say, this is, X BRL for USDC. This is Y BRL plus USDC. This is Z BRL through USDC. And we're going to route that transaction to this liquidity provider here. And what that effectively does is it takes these silos of liquidity, even within a single country, but they're siloed by these providers, these liquidity folks. And it puts it into kind of one liquidity pool for that country where you're able to access the liquidities of multiple providers, combine them together. And now imagine that, but on a broader scale across, 60 countries, not just one kind of local geography. And that's a lot of what we talk about with kind of this maze of liquidity where you need to navigate, okay, this is really good liquidity in Brazil. This is really good liquidity in South Africa. This is really good liquidity in Kenya. This is good liquidity in Argentina. This is good liquidity in Mexico. And then obviously these liquidity providers, they make their money on spreads. So their incentive is to have as much spread as humanly possible. Your incentive is to pay as little as possible for that liquidity. And there needs to be, some sort of a matching engine in the middle that finds that.
Do you feel like because the matching engine or the kind of smart liquidity routing system that you guys are building, have you seen what sort of dynamics have you seen within the network itself? Like from a user standpoint, to your point, it's great because you can have these types of companies really compete for the best product, the best price, the best experience. When you think about the PFI side, what are you seeing as maybe some of the core benefits to being involved in this network? You mentioned a lot of those folks in Brazil or companies in that specific region. Speak a little bit to like the benefits that those types of companies see on a global scale on the flip side of that side of the network.
We think about these companies in kind of 2 columns. One is the beneficiary column, which are companies that are having transactions routed to them and they're providing the local liquidity. And you may think that they generally really don't like Borderless because Borderless is creating an environment in which they need to compete with others in order to win that order flow. But that's often not true, actually. This competition happens on a daily basis from a BD standpoint, around brand standpoints, around marketing dollars, around, they're already competing with these companies. And what Borderless does for them, which they like, is it makes it a meritocracy. It's no longer a question of, do you have a better Rolodex than I do? Was your conference more successful than my conference? Did I talk to the right guy at a happy hour? It's now purely, does my product perform better than your product? And it creates a very strong set of meritocratic rules versus this more ambiguous, oh, I lost a deal to my competitor because I talked to the wrong guy at a bar, which nobody likes at the end of the day. Right. And then on the originator side, what it unlocks for a lot of these companies is most folks in the network are both beneficiaries and originators. So great, I'm licensed in Brazil and I have my own liquidity that I provide between BRL and stables. But a lot of my customers want cross-border payments. They don't want just the BRL leg. So now I can also tap into Borderless as an originator, and I can then transact with the me of Kenya, as an example, or the me of Nigeria, to now enable my platform to serve an end-to-end Brazil to Nigeria corridor. So what we're seeing is a lot of these folks and a lot of orchestrators are starting to build full kind of corridors end to end. And the fastest way for them to get access to a bunch of globally, licensed counterparties around the world is to connect to Borderless. And all of a sudden they have the connectivity pre-built into this dozen, 2 dozen different thems, but in different markets that they can collaborate with.
Did you recently, I think this was last week, we saw this massive partnership announcement between BVNK and Paxos in the US. Is that, when you see that, is that like, hey, with Borderless, something like that is actually just like not that big of a deal, like it's kind of inherent to the product. This is, part of what it would mean to work with Borderless. Um, I guess when you saw that, what did that feel like? Is that validating? Is that, um, are some of these types of companies targets for you, partners for you? For me, it's like, hey, BVNK is, like you said, they're very well known to be regulated in Europe, obviously want to become a global business and have all of the licenses in the US. Um, through something like Paxos, that deal just seems significant in this conversation, or like maybe a leading indicator of what other companies are going to be thinking through. Do you see that in the same way?
Absolutely. These companies are customers, they're partners. I think what this shows is the amount of interconnectivity that needs to happen between stablecoin orchestrators. And you may think to yourself, geez, BVNK and Paxos seem, very competitive. They offer some sort of custody product. They offer some sort of on and off ramp product. I don't think BVNK is offering stablecoin issuance yet, but I don't know their roadmap off the top of my head, but this is a very common road where people are going, right? We've seen Bridge offer issuance. We're seeing a lot of other companies start to offer issuance. BVNK has the licenses. They seem to be going kind of this vertically integrated, everything stablecoins to one place. So why not? I think it's a reasonable assumption. But even these competitors are partnering and working together in certain markets. And what we focused on is to basically completely commoditize this connectivity, where you could decide, hey, I want to partner with these 10 or 15 different people. And you could spend, $5 million over the next 12 months integrating all these different APIs, maintaining all these different data models on your end, hiring additional people in operations to do all the reconciliations across all these different silos of transactions, these different providers, hiring somebody on the risk and diligence side to do your constant vendor DDQ gathering from all of these different partners. Or you can pay a platform license SaaS fee to Borderless and have all this spun up for you tomorrow, right? And for us, that's the perfect example of a SaaS product, is something that is very time consuming and labor intensive that many, many people want to do, that you can then productize and sell to those people or license to those people for fractions of a cost of what it would take to do themselves at a much, much higher quality than they could do themselves, because you have so much more volume, so much more connectivity, so much more, you are the sum total of what everybody can do by themselves. And that lets you get efficiencies and network effects that no one can do by themselves. And that's what creates interesting moats. And actually, it's not even a time savings of going, or a labor savings or cost savings of using Borderless to connect to all these. It's actually just a better experience and a better product to connect through Borderless, because we can do this on such a different scale.
Yeah, yeah. Fun question for you, just kind of as we
Sure.
close here. When you're building this, it seems to me that this is um, I don't know, this might not be the best example, but it's kind of doing what Shopify did to starting selling online. Like, it's just like, we'll handle all of this crazy complexity for you on the back end. Just go build we'll just go build a website, start taking payments. It's super easy. You don't have to go integrate payment tech. You don't have to go integrate like fraud and compliance and security stuff on the back end. Like, just go use Shopify and pay $20 a month or whatever. Um, Question for you: if you were to be not building Borderless, leading the charge there, what type of business would you start using Borderless that you think would be so like really uniquely compelling, knowing what
Yep.
you know Borderless can unlock and kind of mitigate now? Like, what's the drop shipping of in the
Yep.
Shopify world with Borderless, I guess, is the question.
I think the next massive primitive to come to fintech is going to be global dollar accounts. And we're seeing some momentum there. As an example, Stripe released their kind of concept of global dollar accounts. We're seeing a lot of startups building global dollar accounts. That's probably actually the number one customer demographic right now on Borderless's network are people building these global dollar accounts. And the basic concept is, hey, I'm going to hold a stablecoin balance, and I can take that stablecoin balance and I can deploy it in real time and fiat anywhere in the world by connecting to all these global off-ramp providers, right? That's kind of the general concept. And on the deposit side, same thing, right? I can deposit into this global dollar account from anywhere in the world by on-ramping into a stablecoin and holding it in a wallet. And I think this is fundamentally transformational in both the consumer and the business space, because all of a sudden we take away the cost of capital of pre-funding. So typically when you're running a global payments business or a global neobank or remittance business or something like that, you create the illusion of real-time transactions by free funding all these liquidity pools in all these different geographies, different banks, things of that nature, so that you can basically create a deposit here and then initiate a withdrawal out of this bucket, and then you end up rebalancing that in some sort of a treasury function. All of that complexity goes away. If you can actually hold a global balance, all that cost of capital goes away. You no longer have to go raise $100 million round in order to build a global, payments business. You can do it with stable coins from day one. And on the consumer side, you no longer need to have, this is my remittance app, this is my neobanking app, this is my, something else app. All those things consolidate. And now all of a sudden, every neobank is a remittance app because your neobank balance is now deployable globally. I don't need to take my bank account over here and go link it to Wise over here. And it's going to lead to this massive kind of concentration. And I think it creates the first legitimately global fintechs who are legitimately global from day one. And if I wasn't building the infrastructure to power that, I would go build that.
Yeah. When the companies that maybe are building that come to mind, I do this where I like force people to name names. I'm not trying to do that. I'm just like, I'm inherently curious of like when, like the companies or founders that you're seeing who are building those types of, global dollar apps, maybe I think regionally specific ones seem really interesting to me. Just like the companies that can, like, I think about like Takenos and Latin America, just like very deep into a specific market. Any of those types of companies come to mind there that you see as like maybe the recipe or model that you would go after in a specific market, for instance?
I think some of the really interesting ones to look at are like the Yopagos and LATAM, the Polars that are looking more at Southeast Asia, the NSaves that are looking more at like EMEA. Those are the sorts of companies that I think are really interesting to track. Now they're all doing kind of global dollar accounts, which means they're in a, offering kind of global connectivity, which is great. I think that's really important. But from a GTM standpoint, Yopag was focusing on LATAM, Polar's focusing on Southeast Asia, and Save's focusing on like Pakistan, Bangladesh, like these countries that historically have had not the world's most sophisticated access to financial systems, and bringing that access through stablecoins. I think that's a wonderful mission that we should all get behind.
Yeah. Was Polar the company, what was the company that was doing that really amazing use case for, we were working with them on there were global ships, like crew members on ships. Was that
That's
Polar?
Polar. Yep.
Give a little bit of like a shout out to them, because I think that's a really cool use case to bring this to life, like defining your target market and being
Yep.
really clear about like who you're creating this dollar account for. I think that's a really interesting one. What are they up to?
They're one of my kind of favorite YC companies that we've been working with recently, where they looked at this problem and they said, okay, let's get hyper specific on an ICP and a target user base. And their initial ICP was cruise ship workers, where they said, okay, this is a great example of a demographic of people that come from typically emerging markets. They go through tremendous sacrifice to be away from home for 6 or 9 months out of the year, living at sea, you know, waiting on drunk tourists who are probably not the kindest people in the world, to send money back home to their families and to enable a better life for them. And it's fundamentally a remittance problem because they're getting paid out of, US, EU, et cetera, and kind of these developed markets where these cruise ship companies run payroll, and they run payroll on the scale of hundreds and hundreds of thousands of people. This is not, a cruise ship does not employ 5 people. Each cruise ship employs thousands of people across, dozens of ships and a fleet and all those things. And they have a fundamental remittance problem where they're getting paid in USD, and they need to take that USD and send it to their families in the Philippines, in Bangladesh, in Pakistan, in Thailand, in Indonesia, in kind of these places where they're coming from to work and send money back home. And that's just cost prohibitive when you're doing it through, the Western Unions and other things in the world that are charging ridiculous FX spreads and transaction fees, and kind of the old school rent takers who are just maximizing and gouging the profit that they're coming from these guys, versus creating this concept of the global dollar account where all of a sudden I have a stablecoin balance in the Polar app, and I can add to that stablecoin balance through payroll with some sort of a US virtual account where I can get a routing number and an account number that I can plug into the payroll system. My payroll gets deposited there. It's immediately converted into USDC, USDT, doesn't matter, some sort of a stablecoin balance, right? And then I can take that stablecoin balance and I can withdraw it back home in near real time at way better pricing. And it gives me the flexibility to also hold my savings, the currency I want. So if I take $1,000 or $100 and I send it to the Philippines and Western Union, all $100 converts, right? There is no, can you hold some of my USD, but then actually send some of the rest? That doesn't work. But all of a sudden, when you can hold a stablecoin balance, now I can hold as much USD that I want, and I can send just a portion of that versus having to convert the entire balance. And that's a very small nuance. But that small nuance actually makes a massive difference when you live in a country with, a high inflationary currency.
Yeah. It's so cool. And Polar, specifically to them or a company like them, historically, to do this, this is a problem that's a global problem. They are selling to a global customer base on their side with all these cruise lines and all these users who are, in these emerging markets all over the world. Um, they would have historically, without Borderless, had to go one by one to all of these like licensed liquidity providers and kind of cross their fingers and chuck up the best shot they have and hope they met the right person at the bar, as you said, that
Exactly.
they're getting the best price, stitch them all together, and then, do that one by one. With Borderless, this team who's, they're a startup, they're young, they're YC team, they can go to your company with a single API. All of this is within this network kind of ready to go. So in some ways they can unlock the functionality they need for their core user base almost instantly once this integration is done.
Exactly. It's
Pretty
global
pretty
from day
amazing.
one. It's default global at this point, right? They connect to Borderless, and then slightly more complicated, but in a high level, right? You connect to Borderless, you
It's
log
like a
in, you
light
see
switch.
the
You just flick
provider
it.
marketplace. Exactly. And then you can say, great, I want to enable Bridge for the US. I want to enable Bitso for LATAM. I want to enable Yellow Card for Africa. I want to enable Reap over here. I want to enable PDAX. I want to enable,
Yep.
it's where Borderless itself isn't a provider. Borderless is that connectivity layer. So
And on
you
the
connect to
wallet side,
Borderless.
Dynamic, is this where you and Dynamic, you have an integration there? Speak a little bit to that piece.
Yeah. So Borderless is purely a non-custodial platform. So we focus on the connectivity to these different providers from the wallets. And we're fortunate enough that, we have great partnerships with the leading wallet providers in the world, including Dynamic, that make it really, really easy to use Dynamic for your wallet infrastructure and then use Borderless for your connectivity layer, and then enable companies like Bridge and others to provide the liquidity and the orchestration at the end in the regions that they support.
Cool. So if I'm Polar, and I really love Dynamic, I want to use them. These two pieces can play nice together and integrate really easily.
Exactly. There's a lot of
Cool.
complexity in the integration that's just kind of handled on the back end because we've done this partnership.
Awesome. Kevin, man, thanks for the time. This was fun. Appreciate
Always.
your thought leadership and your involvement in this report. Exciting stuff, what you guys are building, and best of luck as you guys close out the year. And we'll continue to follow stablecoin regulation as it continues to evolve and deepen around the world. Would love to have more of these conversations with you. It's always a gift.
Likewise. Good to see you, Drew. Thanks for having me on.